I'm Matt Bouchard with REIT.com, and I'm here in New York for REITWeek 2012, NAREIT's Investor Forum. Joining me is Stephen Marks, Managing Director with Fitch Ratings. So Stephen, Fitch just released its mid-year REIT outlook. Let's start by focusing on some of the high points. What do you see as the credit strengths and weaknesses in the sector?
Our outlook on the sector is stable, and that's really balanced by a couple of things. One is that liquidity and access to capital within the sector are really excellent, really the best we've seen probably in the last 10 years. In terms of being able to access capital all up and down the capital stack. That has driven very strong liquidity coverages in the sector. I'm also seeing some pretty good improvements in fundamentals in certain sectors. Now, those positive elements are balanced by a few things. The main element that continues to weigh on the sector, in our view, is high leverage, and also more broadly, the economy. The economy is really a wild card within the sector, and companies really just need to prepare and in our view, manage themselves conservatively such that they're able to be nimble regardless of the economic situation.
And does Fitch forecast anything surprising happening in the second half, either positively or negatively?
I think a couple surprises. In some ways, maybe it's not a surprise, but that our view is that there's probably not going to be that much M&A activity within the sector over the next year or so. In particular, REIT-to-REIT mergers, we just don't see that really happening for a variety of reasons. And the ability for REITs to really capitalize on some of the distress, whether it be from banks or special servicers, we think that's a very slow and protracted process, and it's not as if there's going to be a tremendous amount of assets that come on the market immediately. These things grind very slowly, and we just envision that it's just not really going to spur the M&A market generally for the rest of the year.
And obviously we're still dealing with quite a bit of economic uncertainty. In your opinion, what will be the biggest challenge that equity REITs face in the second half of the year?
Well, we think it's a couple of things. One is really the ability to grow. Because companies aren't doing that much development, again, we just spoke about, we don't envision there being a lot of M&A activity in the sector. The growth really needs to come through organic EBITDA performance, and that's going to be a challenge for companies. And so in our view, if companies are managing that growth conservatively and are growing their development pipelines in a kind of slow and steady fashion, that's a good thing. But to see tremendous growth from a portfolio side, from a cash flow perspective, that's going to be, I think, the biggest challenge for these companies.
Great. Stephen, thank you so much for joining us.
Thanks so much, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.